Okay, guys, so we are just waiting a few minutes to go live on Facebook.
Sure.
And it looks like a few other people are joining us here as well. So welcome, guys. Thank you for joining us today. We'll be going live shortly. Okay. All right. So let's get started.
Certainly.
Thank you so much for joining us today. We will be discussing investing in volatile times. Today we have Thomas Cooper and Walter Hester. They are certified financial planners, and they will be discussing how to manage your investments during this pandemic, discussing different strategies that have worked in past recessions and economic downturns. And they've got a lot of great strategies to share with you. So I cannot wait to learn more from you guys. Thank you so much. You have the screen.
Well, thank you very much for the opportunity to speak to an audience. And we are very friendly with Facebook accounts and streaming. We do a lot of streaming through churches as well. We don't need an introduction because Sandra was kind enough to make that introduction, but I'll give you a little background about our relationship. There are approximately 18 professionals on our team with Naples Asset Management Company. And collectively, we can brag we have over 350 years of practical experience. I might lead the most in the entire country, you never know. Now, we, first of all, are a fiduciary firm, and I read a report yesterday that less than 20% of all advisors in the United States are actually fiduciaries. Fiduciary means that the best interest of the client is always at heart, a little bit different than other organizations. Many firms have converted from Wall Street to smaller offices of 20 to 40 people across the United States because they wanted to act as true fiduciaries. Now, many of our firm are certified financial planners. I hold that designation. I'm also a certified public pension trustee for the state of Florida and oversee some fire department assets. I'm on a team, so I don't do that all by myself. And several are MBAs in finance, and also chartered financial analysts. We provide full disclosure on any transaction or any recommendation that we make because we have to live by it as fiduciaries. Most of the accounts that we oversee do not have commissions. Matter of fact, none of them do if they are liquid assets, of course. And also, there's rarely a transaction fee. Many firms have dropped the transaction fees from $7 to $4.95 to actually zero. A little bit on math, maybe Walter, you'd speak about math, what's happening in the market the past couple of times when the recessions hit and pandemics.
Yes, good evening. Yes, when you lose 30%, you need roughly a gain of at least 42% to get back to that 30%. Over 4 years at 10%. Or if you take it over 8 years, you're going to need to gain a 5% to get back to that level that you were prior to the drop. Remember the Great Recession. When we topped out in October of 2007 and hit a low of March of 2009, it took us several years to get back up to that 1561 on the S&P. I believe it was 213 was the year. Now we've rallied higher than that. In the last few months, you've seen a dramatic drop on the S&P with now to rebound up there. So what you need to do is look at, one, on your investment strategies, look at rebalancing often. Even in times like now or even times prior to a drop in the market, rebalancing is always something we suggest to look at every quarter to 6 months to a year at least. You can put in things such as stop loss. We have a stop loss policy where you put a percentage of a rolling stop as say the S&P goes from 3,000 to 3,600, and you have a 5% stop loss on it. That 5% will move up to the 3,600 level. So if it drops 5% from the 3,600 level, which would have been a 20% move to the upside, the 5% would be roughly around 18 points. So it would stop you out and automatically would become a market order and sell right there. We also use option contracts for hedging purposes on put option strategies on the SPY, QQQ, and other ETF index there. And in times like what you've been through, a lot of clients don't, but some clients will. There's short selling techniques that you can use. And on those techniques, you profit from a downturn. What a short sell is you basically buy the shares from someone and you sell it at the price after you buy it. Then you turn around. If you sell it at 25, you turn around. But if the stock drops down, you buy it at, say, 20. And at 20, you turn around, you buy the shares back, and then you give it back to the guy at 25. So you've made that 5-point difference there. And then there's also inverse funds that you can use on the VIX that we used during this last drop to offset any losses. So there's ways to do this, to help protect your portfolios on downside risk. Now, this last drop was pretty dramatic, pretty fast, I would say, Tom. I mean, it was middle of February to the middle of, in 1 month, we dropped dramatically. It was quick, you know. So you might not have got in before, but you could have got in during it. And again, this is times you look at your portfolio after we run back up. Look at rebalancing to offset risk, and think of other strategies to offset your risk of downside. Again. All right, Tom.
Well, we didn't mention dollar cost averaging. Most people are familiar with that. If you were investing in a 401k, you're buying shares hopefully at a lower price and hopefully selling at a higher price. I have a relative that just lost a significant amount of money because he did not rebalance his portfolio on a quarterly basis. And I feel bad for my cousin. Of course, I don't manage his portfolio. He's 1,500 miles from here, but he's a great guitarist. Also, there's a strategy called the bucket strategy. It's not all that new, but the bucket strategy is a way to divide your assets, especially managed accounts, into 3 or 4 different buckets. And the first bucket might be a money market fund, or perhaps a checking account, or something that's highly liquid and basically is close to being risk-free. And that bucket of money should last for at least 2, 3, 4, 5 years to live off of if you're taking income, or to protect the balance of your portfolio so you can weather storms. If you don't hedge your portfolio on the stock or the mutual fund side, you still have plenty of cash to live on. Secondarily, the second bucket would be a composition of short, long, and midterm treasury bills, or perhaps municipal bonds as well. And that bucket would be spent down after the first bucket runs out of money to fill the first bucket, so you can always have dependable income for your vacations and your rent and your HOA fees, whatever it might be. The third bucket, or sometimes it's a fourth bucket, but commonly the third bucket would be your riskier portfolio. But in times like this, you don't want to take on too much risk either. So often value positions will hold up better in a recession than growth positions. So you have to take a balance of having some value, growth, small, and international securities on that bucket, which most of us have experienced. Many times, all of our money are in portfolios like that. And when the recessions hit, or something unusually happens in the marketplace, and it happens every 7 to 10 years, as we know, we take a hit. However, if you hedge your portfolio, as my partner mentioned, you can minimize losses by 90 to 95% and maintain your position and not have to sell out. One thing that's really important is the risk tolerance. And the risk tolerance sometimes is forgiven that, well, I don't need to review my risk tolerance. I did this 3 or 4 years ago. But as a certified financial planner, I believe that the risk tolerance model should be diagnosed on a yearly basis so that we know where we're going forward. And it's important to develop some type of plan, a plan of action, so you don't have to be calling up your broker or your investment advisor, or whomever it might be, when the weather's getting kind of tough. Now, I was a sailor for many years as a hobby, and I know when the wind blows and the market's going up, we want it to be fully invested. However, when the wind stops, what do we do with the sailboat? We take the sails in, and either we put the motor on, or we anchor and we fish until the market recovers. But that's not a great way to sail a sailboat. But I do use many of the tactics in sailing with my clients in their financial planning, and develop relationships with recognizable professionals to manage assets. At one time, I managed my own portfolio. And now that I do more financial planning for my clients and business owners, I do not manage my portfolio. My partners manage my portfolio. And if they make a mistake, boy, oh boy, they're going to hear it. So a little more.
And it's times like these that you do not panic that we just went through. Don't ever panic and just sell it because you feel like, oh my God, I'm losing more money. There are opportunities. That is a time to reevaluate your risk when you see it dropping. If you're not going to hedge, reevaluate it. Take chips off the table. Yeah, you might have seen some people, Tom, they up over the last few years. The year before, I believe it was up 31%. The market was down 4 or 5%. Reevaluate at that time. Do you really want these? Are these investments? Are they overbought? Or they look for some underbought valuations then? So always do not panic, please, and just reevaluate your risk. Apply some portfolio protection. Talk to your advisors or your brokers who handle it about that. And always have an emergency fund. Do not rely on your investments to get you through times. If you have money that you need, that you're going to be needing in the future, do not put it at risk. It's that simple. You need that emergency fund. 6 months to 2 years out is what we recommend. And establish a crisis plan. Who do you trust? Tom will tell you right here, he's a great CFP, financial planner. We love working with him because he can establish those for you, those type of plans for you. And everybody should have that. And then let him build a financial plan for you. And then stick with that plan. Do not try to deviate from that plan. And that's what gets most people, Tom, is they deviate from it. They deviate a lot. And that's where you have, Tom, we love work.
Excuse me?
We're still live.
Okay.
That's where you have that's why we love working with financial planners, because when things change, time to your plan starts kicking in for retirement changes. So work with him, talk to him. He will talk to you regularly.
I certainly do.
You certainly do.
And I do prefer face-to-face meetings. At times I've had to wear a mask meeting people face-to-face. I'm getting more familiar with using digital technology. However, I'm not all that comfortable with it. Neither is my professor's son at Liberty University.
Tom, we cannot hear you. I don't know.
Can you hear me now?
Yes, now I can.
Okay, I apologize for that.
Thank you.
All righty. Let me just make a statement from a commentary from a magazine called Think Advisor, and it is why planning-led advisors are better positioned during a pandemic. And anyone who would like this document, you can request it from Sonda or myself or our firm. It's quite an interesting story, and it does state that planning-led advisors, and I believe I'm one of those type of characters, the clients that have a full financial plan or retirement income plan have 7 times less different type of risks: the emotional risk, the policy risk, the management risk, even protecting their homes and their pets. So as a financial planner, and because of this pandemic, many people are hurting because they've lost their jobs. Some have lost their businesses. I'm offering a pandemic, what I call a pandemic special, and I will provide a full-blown retirement income plan, which can consist anywhere from 30 to 41 pages of data to help you make good decisions, to help you build a financial roadmap. And it would include a portfolio review, an insurance review, a beneficiary review, an income tax review, a risk analysis, and the estate and beneficiary review. It's important to have these things in one place. Many of us have different advisors doing different things, but it's nothing like having a good coach. And that's what a good CFP professional is supposed to be doing. Not worrying about the market, but worrying about people meeting their goals and objectives. If you would like that information, you can reach us at 352-857-7273. That's my personal cell number. Or you can call our firm. We are registered with the SEC. It's Naples Asset Management Company. Our home office is in Naples, Florida. I was just there last week. I had 2 hours of sunshine in a week. However, we're back in Ocala, and we love Ocala. We love the horse country. We love the people here. You can find us in the Chamber of Commerce. You can find me on LinkedIn. You can find us on Google. That's Naples Asset Management Company. And again, I have a question. Think about this. When is the last time your advisor or broker did a risk tolerance and even asked you what type of a legacy and how would you set your legacy up for your family if you're blessed to have a family, as well as what provisions are being made for long-term care? Now, long-term care insurance is problematic in the way it is because many insurance companies, they oversold and didn't have the resources to pay out the benefits. So many companies have moved out of the industry. There is a solution, and we don't have time to get into that solution, but there is a program called the True Freedom Plan, which is a home care plan. And they have agencies that provide home care services throughout the country. And it's very affordable. And it is not insurance, but take a look at it. I think it's quite interesting, particularly for those who are concerned about mom and dad and the seniors and maybe themselves. So what this is all about, to get through a pandemic, to live and survive through recessions, is to have a goal-based plan. Determine what your goals are. A goal is not, I want to protect or I want to accumulate $2 million. That is not a goal. A goal is, I want to educate our children. I'd like to start a business. I'd like to provide a place for mom when she's not well. Those are goals. Vacation and golf, of course, those are great goals too, if we have the luxury to do that. So I wish we had some dialogue. We could go back and forth, but that's not the design for Zoom meetings. And if there's anything else you'd like to comment about the market or about meeting with folks, tell them how they can reach us.
Yes.
Okay.
We can do Zoom meetings with people in other states. Right now, we are being coronavirus careful. So we do meet people face to face with masks on. Last few days, what you've seen is the markets have come back. You've seen the NASDAQ is now, it broke 10,000. We hit an all-time high on the NASDAQ. The S&P as of yesterday, it was up. After the close of the day, it's barely down for the year. So it has recovered a lot, which is really remarkable for the time and period that we're in. You have to remember, nobody plans for times like this, a coronavirus, where the whole economy was shut down. The states closed. Very few essential businesses were up and running. But we will get through this. The markets will always come back like they have. They've just recently come back, and the economy will come back. Experts out there are predicting 2021 that the economy should come back and be closer to normal. I believe it was the new normal. Jerome Powell said today that 2020, you'll probably see GDP decline by 6.5%, but expect a rebound in the third and fourth quarter from a heavy decline in the second quarter. Again, that's where at Naples Asset Management, it's namcoa.com is our website. Come in, call us, look at us. Let Tom here prepare you a plan. Take advantage of the pandemic special. It's something you're not going to get normally for free. This is a one-time offer that Tom's going to do. And he can put a plan, you will be amazed at the plan that he puts together for you. You know, like he says, he'll do tax reviews, risk analysis, estate beneficiary planning to go along with your investments. Thank you for this time that you've given us tonight.
Appreciate it.
And we greatly appreciate it. And you have a wonderful night. Stay safe.
Sonda?
Wonderful, guys. Thank you so much for all that information. And if we do get any questions after the fact, I will definitely relay them to you. And I will connect anyone who may want to be connected with Tom and Walter here. Just let me know and I will send a professional introduction. So that's all we've got today. Thank you guys so much.
Thank you so much.
Thank you so much. Bye-bye.
Have a great evening.
You
You too.
Thank you.